Good Fed Day, Warriors. How you doing, Alexander? Bran, could be dangerous. AJ, Ingmar, hi, Kman, Patrick, team. Nice trade on Canada for Pipsar. Blake Morrow.
Hey, good morning, Coach.
Hey, nice
Morning,
trade.
Coach.
Nice. Hi, how are you? And Ryan, are you
Morning.
here?
Ryan is not with us today.
Because I
Yeah.
didn't talk to him right away yesterday. Um, okay, so Canada, real nice trade. Let me start with Stell, since you haven't been here around. What are your expectations for the Fed today? Is it like everyone else's? They do nothing. Do you think he'll be mean or nice? Hawkish or
Uh,
dovish?
well, I don't think there's any doubt they're going to stay on hold.
Yeah.
The question is, which way do they lean? And the thing is, the numbers have been pretty good so far. GDP was better than expected. Inflation is ticking down, but slowly. The question is always in the details. So even though headline numbers seem to be pretty good, the details are not as good. And this is for GDP and for employment and for everything. And we've been talking about this for a while. So what do I think he's going to do? Unfortunately, I don't think he's going to give much direction because there's no serious argument for either side for him to either, come on the dovish side or on the hawkish side. So,
Yeah. Okay. Well, I think another big announcement or news is going to be the package of the debt offerings. I believe they're going to be announced today too. I kind of look at it this way, and Blake, you could back me up or correct me. With Danielle DiMartino Booth for a long time, talked about that the Fed wanted a lower market. They're actually targeting the wealth effect. Do you remember that?
Yeah, I mean, well, that was her.
hey, sorry, my router went down. I have no idea what happened. So I'm back now from my phone. Anyway, I don't know how much you heard from what I said. Where did I get cut off?
I I just moved on. Just
Yeah.
unfortunately, they probably won't give us much
Yeah,
direction.
the more important thing probably is the schedule for treasury issuance, which we're going to get today, right? So
Right.
that's
Yeah.
maybe more important. I hope I'm wrong. I hope the Fed does do something, either on the dovish side or the hawkish side. But I don't think there's any major reason for Powell to lean either way yet. So yeah, it's a tough
Yeah.
call. I don't think we're going to get that much today from them. It's definitely not going to be hiking, that's for sure.
Okay. So it's going to be, if he maybe uses that expression, still higher for longer at the presser. So Blake, what I was talking about, if it's true, the Fed, they trade. They can see what happened to the market. They know the market's vulnerable now under 4,200. And I think that Daniel's theory is really going to be tested now, because he has the market on its back foot if he wants to generate a stock market decline. Much stronger position to be doing it now than at the last meeting. I think we were up here, and he had a pretty negative effect at the last presser. So we're going to find out what he cares about. If he cares about wanting to take the market down because our economy is so financialized.
I
That's
think
what I'm
that
thinking.
a lot of people believe that the Fed looks at the markets. I don't know if they, I don't know how closely they look at the markets. I've never been in the Fed, but I would say this, that it is going to lend a hand to tighter financial conditions if equities come down, and I think that's probably the general sense of the markets.
Okay.
If they want financial conditions to continue to tighten, which they do. I mean, you see the economic data, and this is going to be the problem that the Fed has with this is kind of why they're in a box right now, in my opinion, is because you have economic data that continues to be strong. I mean, we're going to see how strong with some aspects today with the ADP, which is literally in 10 minutes. We have ADP data. I'll take over in like 5 minutes to just get ready with the charts. But we have ADP data, we have ISM, we have JOLTS data, all before the Fed. And as we've heard from the Fed and from every central bank, we are data dependent. And I agree with Stelios. What's the Fed going to do here? You've got strong economic data. We're probably at the end of our hiking cycle, along with every other central bank for the most part. I mean, give or take a quarter point here and there. With every central bank, we're pretty much done. Bank of Japan is that outlier that who knows. And obviously this week they showed that they're not willing to do much. And Kman could, probably go on and on and on about that. But for the most part, we got most central banks where they're going to stay. They've got to let the mechanism of seeing what monetary policy at current levels and moving rates up as far and as fast as they have like as I just said, as fast in a short period of time. They've got to let that mechanism work itself through. Then you got the risk of what's happening in the Middle East on top of everything. So everything's going to be data dependent, and I don't think the Fed's going to, veer too far away from that message. Maybe the risk is at this point that they cite some of the risks that are associated with what's happening in Gaza and with Israel and Hamas. I don't know.
Well, I tried the long side of a TLT ETF, and I got out yesterday because the way I see it here now is I do believe there'll be a third drive. There are targets around 80, which is substantially lower. But TLT could do that in a few days.
Yeah, I mean, look at what's happening in bonds and what's happening in yields.
Yeah.
Richard makes a great point. He goes, inflation has accelerated since June. Yeah, and it's not coming down. I mean, you saw yesterday the ECI, the employment cost index.
Yeah,
that is up another 0.1% more than expected. I mean, prices are not slowing down, or they've slowed down, excuse me, but they're not going back to 2%. They're staying elevated. That means that inflation is still ticking higher. A lot of people, this is going to be a big
this
shock.
crude doesn't look bad. This is going to exacerbate it and make it tougher for them. I thought we might go a little bit under 80. But this looks like, almost like Canada did the other day, like a little triangle up here. And I know everyone's so sanguine. Anas was, Tracy was, energy sources that I talked to, very sanguine about there's going to be no supply disruption. I don't believe it. It's the biggest weapon that, that countries, nations have in the Middle East is their oil. So
yeah, I mean,
if
crude's held that 31 or 38% retracement, it's bouncing pretty aggressively today. I'm quite surprised. Well, I'm not surprised, but I mean, at the move today, I'm surprised how aggressive it's been. But it doesn't surprise me that we're bouncing.
We could be over 100 if we start trading over 90 in a heartbeat.
Yeah, I think 90. A lot of people were trying to make arguments for weaker crude. I actually just listened to a couple podcasts, and I'm scratching my head going, I just don't see it. But that's me. But we were sitting there watching price action go down, and crude move lower, and it's like, okay, well, I guess it's moving lower. And then all of a sudden here we are today, and it's ramping higher. So I agree with you, Dale. I think that the path of least resistance still remains higher.
Just to take a quick look at the poster child again for AI. I tweet, it's funny. Someone help me. I've lost my AI. So we're still under 410 under the neckline. It's trying to recover, but it's on the ropes here. If we can't close back over like 413. So, we have Apple earnings tomorrow. It's trying to bounce off this little 1, 2, 3. So it's a big week in the market because if he doesn't sound hawkish and we start getting back above 4,200 in the S&Ps, it's going to look pretty good for maybe 4,300 or so, or better if we start getting back over 42.
Well, first things first, we have ADP coming up in 5 minutes. Do you mind if I grab the charts, Dale?
No, go ahead, buddy.
All right. So everybody, I'm grabbing, and by the way, we have Nick here. Nick's joined us for some commentary. Nick, I want to hear from you after we cover the ADP. So just stand by.
When's the BOE tomorrow? BOE
Sounds
tomorrow.
Good. Good morning, guys.
Yeah.
Tomorrow.
Hey, Grasshopper. Go ahead, Blake.
No, yeah, we have the Bank of England tomorrow, which, by the way, that because of the time change, Kman, when is it? I'm trying to think. Do you end up covering that on the Flow show?
No, it's gonna be right at the start of F.A.C.E.
Okay, that's right. And then we do our time change. It's such a screwed up week. Hey, real quick, since we got you here, Kman, for ADP, what are you thinking here with the data? And
it's a lottery.
I mean, what's that?
It's a lottery.
It's a lottery.
It's important for exactly 5 minutes of algo trading, and then we are going to focus on what the U.S. Treasury will want to do with their
issuance
plans. Choice of what they will want to do will be important. I think that maybe that and the ISM will probably be the two most important things today. I think the FOMC is on autopilot despite whatever data that came out in October. They're not going to move anything right now. Jay Powell is probably going to walk every side of the spectrum again, as he used to do. He will acknowledge a very strong economy and then acknowledge that conditions are a bit restrictive, and that's basically it for me. I think FOMC may be the smallest mover of the whole day today.
Yeah, I mean, they're stuck, right? I mean, what do they do? It's just they're in a bit of a quagmire here.
They could, but they don't want to throw the market into disarray either. What's going to happen in 18 minutes? Well, that's probably going to be the most important thing. If U.S. Treasury really wants to go much more in bills than notes and bonds compared to Q3, then I reckon the curve may move a little bit, and perhaps that may de facto weigh a little bit on the dollar. Whether it's whether it's really warranted or not, I don't know. We will see that, but we will have to really watch what the curve is doing after the Treasury announcement.
Sounds good. Thanks for pointing that out, because then we can just find out how much issuance is really coming our way. Hey guys, just real quick, if you look at the euro, we are on, what I would consider, this is a flag channel, however you want to look at it, support, we're there. And a lot of people are looking at this as a bear flag pattern, which, when you start measuring it, it looks nasty if we really break down today, like the targets can take us below parity. I mean, that's just how, disgusting the euro's trading at right now, how heavy it is. But what looks at risk at the moment is we start breaking through some of this support even ahead of the Fed. So, by the way, the dollar rand just made a bit of a move.
I think a lot has to do today with Euro Crosses giving back everything that they took over the end of month.
Yeah, and that was yesterday. We had
so far.
And one of the big reversals yesterday, I gotta point this out really quick. How much time we have? We have just a few seconds.
Minute.
Yeah, the euro pound, we went above the 50% retracement, and then we did a bearish outside day yesterday.
Yeah.
We broke above all that resistance, bearish outside day by the end of the day, and now we are reversing. That was a big one. Okay, so let's go over to the euro. Here's a 15-minute chart. That's not what I wanted. Actually, I wanted the dollar index 15-minute chart. There we go. And let's do this. I'm going to pull up a few different charts. You have the S&P right in the middle. I'm going to pull up the dollar index right there. There's S&P and there's the 10-year, and we have ADP coming out. Market's looking for about 150,000. Let's see what we get. Let's see if it can, strong data.
113, 113.
Little weaker. Interesting. So the big reaction would be, we are seeing the dollar yen bleed a little bit. There was a lot of comments last night from the BOJ, wasn't there, Kman?
Yeah. And the important word is back. Kanda said that the biggest reason for this move is speculation. And that is the word that I spoke about it or as well over the flow show. That's really the word that this market is looking for. And if you see that, then intervention is on the next move. It's likely to be there. So
it was Kashida that said that last night, right?
Kanda.
Okay.
Kanda,
get all these names
top FX diplomat said that. So I reckon we're really very, very close. And you see stuff like, most of the yen crosses are reversing a little bit. Yen was also one of the currencies, together with the Swiss franc, that got hammered the most over month end, and they're both starting to get a bit stronger again. On the yen side, it's likely due to those warnings. But the euro yen overshot and is back. You're just on there. And it's back below the prior high. And that's to do with
it was enough to stop me out. I was short. It stopped me out, and we hit the underside of the broken channel, and then we reversed. I was just
but we went just to one extension there around 160.70, which
the 127.
And that's where it stopped.
Yeah.
Kman, any insight on the yield curve coming out of inversion?
Yeah, I mean, in theory, Dale, okay, but we haven't traded inversions for quite a while, and the reasons why as well. And the pandemic is a bit of a strange thing because we never had any experience on how to trade a pandemic, really. But usually when the yield curve steepens with okay economic data, it should be bullish dollars. And when it inverts, as people were expecting, it should be signs of a recession to come, right? Now, a flat curve is a bit of a strange one to trade, because I mean, the saying goes like steep is okay, flat is not okay. So and we are, I mean, if the
and we're flat right now.
Sorry,
are we flat right now?
Well, we are so much flatter than we were a year ago, right? So
we're steepening.
If you start to steepen from here, but that means that assuming that the short end stays and the long end goes more up, should be very bullish dollars. But it's all theory. That's for the theory books, Imagine that labor market starts to falter. That's not going to be good for the dollar, right? But I think we should pay attention to what happens in about 10 minutes time. I don't know the exact divisions or splits of what the US Treasury may be up to, but they usually don't want to go above a certain percentage in bills. If we get above that percentage, which Magix is saying is around 20%, if they go above 20% of bills, then you should reinvert a little bit more, perhaps, and that should be a bit negative dollars. But that's theory books, and because we've got so many other data still to come out as well. But it should be a bit of a mover here.
All right. Well, thank you, Kman. And then, I heard Nick's voice. Nick, what's on your radar today? We got just a couple minutes. Wanted to hear from you.
Yeah, how's it going, guys?
Hey, Grasshopper.
Yeah, how's it going, Dale?
Good.
Yeah, so I'm excited to see what the Fed has to say today. I'm kind of looking for somewhat of a 1-2 punch. So I'm looking for what the Fed says and then rolling it into NFP. How that comes to be, we'll have to see. But I'm thinking the Fed's going to leave the door open for further rate hikes. I don't see why they wouldn't. I don't think that if I don't think they're going to hike today, but I think they leave it open because there is a lot of risks around that you guys just mentioned a little bit earlier. If they leave that door open and then we walk into NFP on Friday, let's say NFP is strong, I think that could really hurt the equity market, especially every single Friday. The last 3 Fridays, we've seen the market sell off due to the geopolitical risk. Then on Monday, we've seen it rebound slightly every single Monday. That's been a pattern. We'll have to see if that continues. But in the event that NFP is still strong, and I was just looking at the historicals, 9 out of the last 13 months, we've seen NFP strong. In majority of the time that we have a projection underneath 200,000, we come in the green. This month, I think we're looking for 188,000 jobs. The U.S. consumer and the U.S. jobs has been relentless. Obviously, ADP is showing a little bit of slowing, but I was just thinking to myself, okay, we get a weak number. Is everyone going to run? Oh, it's time to cut. It's kind of like when inflation just kept going higher and we got a weaker print. Was that the end? Obviously not. So we have to stay on that, because in the event that it does come in a little bit weaker, will it even shift the narrative enough for the markets to get happy again? I think we have to see some more data. We have to see a CPI come in next week as well. Is that next week or the week after? But whenever it does come in, we're going to have to see how that prints, because it could start to shift the narrative in the event NFP's weak and CPI's weak. Now we start to get a little bit more of, maybe sideways trading, or at least the bear trend might break a little bit. Now, S&P did hold 4,200, hold below it.
Nick, I was going to mention that very good call on VIX. You're looking for 24, 23 is close enough for government work. So
Yeah, thanks.
I'm wondering,
Yeah.
and I'm wondering if you think this 4,200 level is going to be a wall that the
Yeah, I
market
think
can't get through.
well, as you're showing right now on the VIX, it's still making higher lows, right? And also
Yeah.
with the S&P, I'm looking at two different patterns. If you go to S&P and you go on the 1 hour or even the 30-minute, 1 hour is fine. We got a little bit of an inverted cup and handle pattern that technically triggered yesterday. But we also have a lot of downside as well. But even in the triple Qs, they also held some support. And you pointed out Apple, that also held support. So, it's an iffy area.
Yeah.
We're just too close for comfort, just below 4,200. But that's where I think, I'm calling it the 1-2 punch. That's what I'm looking for. I think that in the event they leave the door open, because why would they? And I also saw
I mean, why would they shut the door? They can't shut the door.
Exactly.
They
Why would
can't.
shut the
Economic
door?
data is too damn strong. I mean, they just can't do it.
It just doesn't make any sense. And I still think that the S&P and the NASDAQ, I was reading something about what's going on with the bonds this week, and I couldn't tell if they said Bloomberg or the Fed, but they said the S&P and the NASDAQ are overvalued, and I agree. So I don't see a reason for them to shut the door. And that also plays into the dollar strength, right? A lot of the other central banks look like they're done, if not close to done. I don't know how much I believe Lagarde, but the dollar index right now is only, I think it's about it's a little under 0.5% away from those highs that we saw at the beginning of October. Is the Fed a good opportunity to blow this through? But I do think off the initial, no hike, the market could get a bit optimistic and bounce higher. I think it's the presser that you might want to sell into, because I think we've also seen that narrative too. Kman's pointed that out a lot. The Fed comes out and, they start to throw the hawkish tone down. So that's what I'm looking for. I'm going to keep my eye on VIX because it's still creating those higher lows, and obviously the 10-year as well. And I think, did Kman call the bottom? I don't know.
Hey, when it comes
is he
to
that good?
No. Hey, Nick, when you go to the VIX, look at the weekly and the monthly, like 50 and 200 moving average. On the weekly, it went right to, I think, the 200 week.
Yeah.
And on the monthly, pull up the monthly, Blake. There again. So
50 moving average.
Yeah. All right. So over 23, Katie barred the door. Okay,
Ooh,
that's a
geez.
big number. So
I agree. And I think in this environment, it makes sense for the VIX to be climbing a higher. And also, just this, I can make this my last comment. I know you got to wrap things up shortly, but in the S&P, we fell 8.3% the last 3 months. Now, that's still technically correction territory.
right,
There's a ton of confluence that this team has pointed out over the last week of a lot of support around 40.70, 40.60. So, I think we could see a bounce. And if you look at last year as well, we hit a low. I think it was October 22nd. I might be right just because I've looked at it so many times. But then we rallied November and December to close higher. So
yeah,
it's seasonality wise. We if we're close to last year and just in general, we could start to see the market bounce. And we're beginning a new month today. Do we really think that November is just going to print green the whole time? I mean, we could take a little stab lower and bounce. So I'm going to take that as an opportunity in the event that we do get down there to take a stab long. And I think your risk, if you try to take a swing trade, is that 39.28 level down there, and try and target 43.50 or so. The RR on that, if you did take that trade, is about 3-1. 2.5 to 1. If you take that trade, if your stop's below 4,000, you got about 5 to 1. So just some food for thought.
Hey, just FYI, and we're gonna get ready for we're gonna wrap things up here. I want to say, Nick, thank you for your commentary. Just so you all know, Nick is going to be putting together some evening analysis for you all, and he's gonna be doing market wrap up videos for you, and it's gonna be something free that you're gonna be able to access. We'll have more information on that soon, but just want to prep you all for that. It's gonna be evening commentary, and talking a lot about the markets, putting it all together for you, but also some individual names and some stocks that might be on the move that you can have on your radar. So make sure that you guys stay on the lookout for that. We'll be talking about that as time goes on. We had a question from Bran really quick. Wanted to take a look at the sterling, and we're sitting here right at support as well. But I still think we're in a bearish wedge. We got the Bank of England coming up tomorrow. Kman, what are your thoughts here with
Bank of England? Well, the market is attaching a lot of importance to the votes, and what the new member is going to bring, the Breeden lady. It's somewhere 5463. But if it goes for 7.2 for a hold, it's likely going to be a bit
lights out.
soft. Huh?
Yeah, would be lights out, right?
Yeah, lights out. Lights out could be already today, I must say. But I don't expect anything spectacular from the Bank of England. They will not hike. The only thing is, every time Bailey opens his mouth, usually sterling gets sold off. So and he's speaking tomorrow.
Right.
Actually, the meeting is not important. It's just Bailey. He's probably one of my worst central bankers I've seen in my whole career. But no, really, I don't expect too much. Inflation is slowly coming off. Data are weaker than in the US for sure. So cable as such, if I look at the differentials, they are still very much in favor of the dollar. And let's see if the combination of those 2 days is going to change anything. Yeah, the differentials are really still relatively wide. So I think still favor to sell rallies in the cable as such right now, and the rest is probably crosses. As I've already been saying, euro is giving back virtually everything that it took over the end of the month. Even euro Swiss is coming off. So
yeah. Speaking of which, we have actually Jordan. He's speaking here momentarily at at the Watchers Conference in Bern. So
ooh.
yeah, I know. Like the Watchers Conference.
Is
it the Watchers because it's in Switzerland?
Oh, Oh, good one, Blake.
Oh, nice one, Blake.
Hey,
Yeah.
hey, I'll be here all day, folks. We have but no, we hit the 618. And by the way, I know Kman, you and Benedict in our chat room, you guys like nailed this one, just trading it off the lows down here, and you know, did really nice trade. That was in the ForexAnalytix chat room, obviously, but
I had a bit
stuff.
of help as well from the end of month, right, where the Swiss was really hammered into the month end. So that's a good one. But we are very close to important levels on dollar Swiss and euro Swiss, both on around the big figure actually.
Right.
Here we
wait,
go.
hey, dollar's weakening.
Yeah. I think the stuff must have come out.
Yep, I'm looking for the headlines
What,
here.
their
Dale, you don't have an
package?
interview right now, no?
No.
Okay, good. Let's see what bonds are doing. Let's take a look at what's happening with yields. Yields are coming off right now. And the dollar is weakening. You see the dollar yen breaking down.
Wow.
Yeah, this is kind of across the board here, guys. So just a little bit of heads up. And you're seeing markets rally. So I'm assuming issuance is going to be a little less. Let's see here. I'm looking just
Boosts refunding by
so
9 billion.
they are tilting. They are tilting a bit towards more bills. But it's not like really massive. I need to look at it a bit closer, but at least, yeah, the as you can see, the short end is staying, or a BP higher, and
yeah,
10s are a little lower, 30s are a little lower, but we're talking really about 1 or 2 BPs here, okay?
Yeah, it might be a little bit of an overreaction, maybe a little bit of positioning. I mean, you just saw the euro. I mean, ticked up, but it's not really following through, and it's mostly the NFPs are, you know, ramping higher. But so are equities. Equities are bouncing here. We're getting close to that 4,200 level. Really big resistance in the S&P. So
yeah, that's the thing. Yeah, risk is also taking a bit of comfort from it. Apparently, you can see dollar rand is even lower. MEX is strengthening just slightly.
Yeah, and actually gold's bouncing. Silver trying to develop this inverted head and shoulder pattern. Really important support for it to hold here in order for it to play out. It's got to hold here today, and we've got a lot of data we're still facing, but this could definitely help it.
And with silver where it's at and where the dollar's at, and S&P near 4,200, if we're all hovering there ahead of the Fed, it's going to cause a lot of hair pulling for people. You know, when you're near those levels, there's a lot of times where those stops just get whipped around, and you just have to be careful today.
Yeah. Well, you know, Stelios, it's good to hear from you. We haven't heard from you in a while. So any last minute thoughts before we wrap up?
I just want to say 10-year yields in the US, we are about 10 basis points away, either way, from pretty big levels. We were 10 basis points when we were at 490. So 5%, 501, what is the high? That is very important. And also below 480, I saw an analysis yesterday, I think, I can't remember who it was. CTAs have been very short treasuries, and below 480 yields is where they start, apparently they start unwinding. So 480 and 5 or 502, wherever the highs, those are the two main levels in 10-year US, and they're not that far. So we could get there very easily, either today or on Friday with payrolls. So be very careful and aware of those two levels.
And if yields reverse, that would definitely put some downside pressure on the dollar. So just you know, we've gotten a lot of these arguments over the last, or you know, arguments about the dollar, like, you know, hey, yields have been, you know, so perky, and the dollar's kind of stopped going higher, and you know, so if they do come down, maybe that's one of the catalysts that drives the dollar lower near term. Thank you. Stelios. Kman, any last minute comments going into today?
Yeah,
I mean, it's gonna be an active day.
Yeah, I was just reading through the details. They do prioritize bills a bit more. Yeah, actually, so somewhere what the meeting the market expectations right now. So we are seeing the curve, yeah, as I said, like reinverting a bit more.
We all prioritize our bills. Kman.
Well, I
Right?
prioritize my bills going into the bin, really. But
I hate the mailman. Anyway.
no thoughts. So yeah, the dollar reacting a little bit on it should be quite okay for risk. And now over to the ISM, I would say.
Yeah, over to the ISM it is. And you know, if that data comes out, now I'm just going to say that if the ISM comes in below expectations, that could really send the dollar in a little bit of a tailspin ahead of the Fed. And just keep in mind the euro is really I mean, think about a risk reward from here. Like if you guys, you know, want to be short dollars, I mean, just look at the support that we're sitting on. I mean, you could be, you know, literally, you know, long the euro, you know, stops below, like, let's just say 105.20. And I mean, you know, from a risk reward perspective, you know, here's your risk, here's your entry, your reward somewhere back up here. You know, think about that. I mean, it's there, you know, may not be the prettiest of trades, but it's set up, right? So anyway, Dale, any last minute thoughts ahead of today?
Yeah, I think it's very important what you brought up in silver. The 2240 level is critical, because if we take it out, it measures like 2120, and then you're only a stone's throw away from, you know, retesting the lows. So
yeah, I mean, look at this big triangle consolidation really here in gold. I mean, this is silver, like longer term, right? So I'm just kind of zooming out. And really big consolidation. I know Stelios will probably be a little bummed out that it hasn't moved quite like gold has, you know, in this environment.
But that pattern we waited for at the lows, right? And you know, we got them. So
we came really damn
that's
close.
all I got. And watch energy. I think people are too sanguine about supplies right now.
All right, yeah, and crude is on the move, holding that support here. So Nick, I don't know if you're still here. Any last minute thoughts before we wrap things up?
Not so much. Just I would just advise to just be careful with some of these big levels, and if you see a runaway train, I'd be hesitant to step in front of it.
Right. Yeah. Righto. Well, guys, I want to say that it is going to be a really, really busy day today. Remember, we have ADP, we have JOLTS data that's coming out. Obviously, the dollar's on the move because of what the Treasury's reporting right now. Then you have the FOMC. Whew. And then, you know, that's it's just it's a hell of a day. And then don't forget, we have Jordan. He's speaking about the Swiss national, or he's speaking, and could be a little bit of a mover in the Swiss franc here in the next 10 minutes or so. So a little bit of heads up there. So Stelios, Kman, Nick, Dale, I think we should probably wrap things up here.
Okay. Yeah, thanks guys, and good luck everyone.
Yeah, good hunting. Good hunting. Good to hear you still. Grasshopper, Kman, Blake, Dream Team. Good luck today. Join our team in the chat room for the Fed later on. And that's a wrap. Don't just count your pips, count your blessings. Good hunting to everyone. And I'll see you tomorrow.
Thanks,
Adios.
Coach.
All right. See you, team.